you curious about what's cooking with the Bank of Canada and how it might affect your next move in real estate? Well, you've come to the right place. Today we're diving into some fresh insights from the Bank of Canada, which might be hinting at putting a pause on those interest rate hikes. This scoop was originally spotted in a Financial Post article about Governor Macklin's latest speech has got everybody talking. Now, before we dive into this, do me a favor, hit that subscribe button, like this video, and when we're done, leave your questions in the comments below. So let's cut through the media noise and see what's really happening. The bond market, which is usually a pretty good temperature gauge for these things, had a pretty mellow reaction. We saw a slight dip in the 2-year government bond yield down to about 4.4%. Hardly the market rally that many were expecting. And here's a twist. The 5-year bond yield, well, it actually ticked upwards. This gap between the media frenzy and the market shrug mainly comes down to everyone fixating on just one line from Governor Macklin's chat, which, by the way, was packed with other important stuff about the new mortgage charter, Canada's growing debt, and some interesting takes from the 1970s. So what's the real scoop from Governor Macklin? Well, he hinted that the current monetary policy might be tight enough to stabilize prices, but he's not shutting the door on more interest rate hikes if inflation keeps being a party crasher. This aligns with what they've been saying all along. You can't take 1 month's CPI data as gospel. Now, despite the headline hype, the bond market's lukewarm reaction tells us that this speech wasn't a game changer for policy expectations. The governor was peppered with questions about potential cuts, but he stood firm, saying it's too soon for that talk. Now, onto the new Canadian mortgage charter. There's some buzz going around on whether helping folks with their mortgage might clash with the bank's efforts to rein in inflation. But Governor Macklin pointed out that people struggling with their mortgage payments aren't the ones driving up spending. His message? Quite simple. Keeping folks in their homes matter, even if the charter's impact on the wider economy isn't really monumental. Now, regarding the latest fiscal update, the governor acknowledged that while it doesn't drastically shift the current scenario, they're keeping an eye on future spending and how it might influence inflation predictions. And here's a throwback from the 1970s, a time of stagflation. The governor stressed the need for steadfast efforts in taming inflation, reminding us of past slip-ups when easing too soon led to inflation bouncing back. Alright, so while the governor isn't completely ruling out more rate hikes, the bank is in a wait-and-see mode for now. The takeaways from the 1970s? Be cautious when easing financial measures way too quickly. As for your next steps in this ever-evolving real estate landscape, that's where my team and I come in. With our expertise and network of preferred partners, we'll give you the local competitive advantage that you need. So if you're pondering your next move in today's market, give us a call. If you enjoyed this and want more insights like this, remember, smash that like button, hit the subscribe, and share your thoughts in the comments. Thanks again for watching, and let's go get you that real estate win.